Bitcoin is struggling to break above $90,000, and the reason is not panic selling. Instead, the pressure comes from long-term holders using derivatives to manage risk and generate income. Bitcoin's recent rally repeatedly fails near the same resistance level. Each push higher meets steady sell pressure that does not appear on the surface. This pressure comes from hedging activity tied to options and futures markets. Long-term holders control most of Bitcoin's circulating supply. On-chain data shows over 70% of Bitcoin has not moved in more than 1 year. These investors are not exiting their positions, they are monetizing them. Rather than selling spot Bitcoin, holders sell call options or use futures. This allows them to earn yield while keeping ownership of their coins. It is a defensive and income-focused strategy. When options are sold, market makers must hedge their exposure. That hedge often involves selling Bitcoin in the spot market. This creates constant sell flow without visible distribution. At the same time, spot Bitcoin ETFs continue to see inflows. Institutional investors are still buying exposure through regulated products. However, derivatives hedging absorbs much of that demand. The result is a neutral balance. Buying pressure enters through ETFs. Selling pressure exits through hedging. Price remains trapped in a narrow range. This dynamic explains why momentum feels weak despite bullish headlines. The market is being driven by mechanical flows, not emotion. Sentiment matters less in this phase of the cycle. Derivatives activity has increased sharply in recent months. Options open interest continues to rise across major exchanges. Higher implied volatility makes these strategies attractive to holders. Bitcoin is now behaving like a mature financial asset. Institutions focus on yield, risk control, and balance sheet efficiency. Explosive upside becomes harder under these conditions. For traders, this means breakouts may continue to fail. Resistance levels become reinforced by positioning, not fear. For long-term investors, it signals confidence rather than weakness. Supply is not flooding the market, it is being carefully managed. That limits downside but also caps short-term gains. To break above $90,000, conditions must change. Either derivatives hedging must ease or demand must overwhelm it. Improving global liquidity could shift this balance. Regulatory clarity or new institutional demand could also help. Until then, consolidation remains the most likely outcome. Bitcoin's stalled rally reflects a structural shift, not a loss of belief. Understanding these mechanics is essential in today's market. Stay focused on flows, not headlines, and follow BlockBrief for daily crypto updates.